Hello, everyone, and welcome to my American company portfolio update. Just to recap on the context, I have started a challenge last year to grow an investment account to £1 million with long-term steady investing, and ideally to achieve that by no later than 2050 with the stretch target there. And we're going to look at the American companies, and that is about 40% of that £1 million challenge, and you can see the breakdown of what that consists of on the screen. I have just uploaded UK and Asia Pacific as well, so I'll leave links to those at the end so you can watch it as a bit of a box set just to go through the portfolio. So the US holdings, I only started this portfolio last year, so it's pretty new and it hasn't had a huge amount of time to bed in, but we are starting to see a couple of these breaking out. Right, so let's have a look at the performance. So no surprises to see Bankloaded Account is the largest holding there. Great performance in a year, up 66%. And that's up 8 points since last month, and it has paid me a nice little dividend since the last update, so pleased with that one. And we've got Corsair, which is much higher in this list because it now is the second largest position. I've increased the position size over the last month as the market price has dropped, and I've reduced my cost average, and I've got the position size to something I'm a bit more comfortable with. Now that's down 8 points since the last update. Not surprising because it is trading at recent lows. I'm expecting that to at least double in 5 years, if not possibly treble. So I've got that's a nice little long-term hold for me now. Food Group is down 5 points since the last update. And yeah, that's still up 21 points. I think this is a great dividend stock. And again, it's a long-term hold for me. Walgreens, not much to say with that one in the last month. Yeah, down a touch, but I think this has got 100% upside and it's a 4% dividend. So again, I think this is a nice long-term hold. TTCF's up 3 points since last month. A long-term hold, and I'm not envisaging increasing that position. There's always that risk that comes with the company that could be growing quickly. Is can they actually deal with that growth quickly? Not have production issues, service issues? Does it translate through to the bottom line eventually? So quite happy with that position sizing. Index, yeah, just take it away there, up 1 point. And Dropbox released some very nice earnings, very good management team, and that's up 4 points since last month. And again, this is one where I'm expecting to hit the 100% club. US Bancorp, again, released earnings, they seemed all right, and yeah, pretty steady, and chips in a nice dividend. And BP Midstream, this is one that's disappointed me actually. It's down 11 points since last month. They do pay a 10% dividend. However, there looks like there's a takeover offer, and BP might be buying them back after only spinning them out a few years ago. But the offer, I think, is only around $13 a share, which was below their market price, and it seems a little bit cheap to me. I'm hoping that gets negotiated upwards. So I think my potential returns on this one, which is going to be a nice long-term hold with that big dividend, potentially that is going to come into a bit of traffic, a bit of interference. Anthem, yeah, that just ticks along steady. That's a long-term compounder. And we get to the first coal companies here, and coal has actually been the biggest positive influence in this portfolio in the last month. Ramaco released outstanding earnings, and they beat analyst expectations by over 200%, which is great. And this is up 55 percentage points since the last month. And this is more kind of the coal for the steel process rather than the thermal coal. But yeah, 90% on that one, up 55 points. It's a nice cyclical company, and this is one I probably envisage actually selling out of this year. Because the cyclical companies, I think, take advantage of the cycle of the commodity and then kind of ding out of them. So they're sort of medium-term investments rather than long-term holds. Love American Express, in a year that's up 2/3, so pretty delighted with that. No real change since last month. And Sophie's been up 6 points since last month, and I think they have got earnings coming out in the next couple of days. Yeah, really going to watch that very keenly. I'm actually perhaps a little bit less sure on this one than I am most of the other ones that we've actually gone through. This is one potentially that I might be looking to close out the position. You know, this is a busy portfolio, this one, if you look at the number of holdings. And I think if I can consolidate and then have a bit of cash ready for opportunities on the ones I'm more confident on, then that's probably where I need to go. So Reach, they beat on earnings in terms of EPS, but they went down, and they are down 8 points this last month. There was a bit of takeover talk at quite a low price, I thought, which it needs to be higher. So this one I'm expecting to make 100% on, but it's been all over the place. I think I was up Go back several months, something like 75%, it's dropped all the way back down. It's very price volatile. It is a small market cap company, but I remain confident that this is undervalued, room for good share price appreciation to at least $40 a share. My average is, I think, just under 22. Bank of America, yep, that just ticks along nicely. No real change since last month. And the same with Berkshire Hathaway. They're just long-term holds, and then just add those positions if there's any market crashes like there was last year. Coal company number 2 and the best performer in the portfolio, Alpha Metallurgical Resources. This one's up 64 percentage points since last month. I think it's up about 100 percentage points in the last 2 months. So my first holding that I've ever had in all my portfolios, it's got to 250%. And it's the first 100% club member in my American portfolio, which is about just over a year old. So yeah, the coal price in the market is going absolutely bonkers. And this company's also been cutting its cost basis very well. AMR, formerly Contour Energy, I think this could still double potentially. So I'm looking for 500% return on this one, which sounds insane to suggest. Right, we're into the sort of smaller end of the holdings now. Intel, that has it's dropped a few points. I still think this is a great cash flow machine in the long run. It's definitely a long-term hold for me. And if the price drops down to sort of $45, $40, then I'll be adding to that position. Seritage, again, a long-term hold as an asset play. This is going to take quite a while to pay back, but in 5 years' time, I can see this easily being a couple of 100% if all goes to plan. It's down 4 points since last month. And GAN's down 12 points since last month. They brought out great earnings results, but this is a very small sub-billion pound market cap, $1 billion market cap company. There's a back end for the betting infrastructure. Yeah, they look like they've got some excellent sustainable growth ahead of them. Cumulus, again, decent results, but they've dropped 12 points since last month. I think they're really undervalued, unappreciated, and the management's doing a good job turning this company around. Most great performer, 91%, and this is one of the other big movers, up 40 percentage points since the last update. Just a pity that I didn't have enough cash at the time when I bought this and to get a bigger stake. And then Sturm great results released last week. Expecting that one to continue to progress well. For Dokisho Education, this is one that released their results slightly disappointing. It was slightly below what was expected. And I think this is another one where I am actively looking at them with regards to consolidating this portfolio a touch. Weighted holdings, a long-term turnaround. This could take a while, but I think there's potentially high upside potential, but there is a little more risk, which is why it's a small position. Diamondback Energy's up 68%. It's down 18 points since last time, which is a bit disappointing, but I think this is a 100% jobby, cyclical, and then exit out of that one. Ultra Source, this one potentially is going to start flying soon. Up 12 points since last time. This is around kind of foreclosure activity in the US. And then we're into the really small ones. So Voyager, that's a platform that's effectively tied to crypto. And then Planet 13, I think this is again one. Have looked into it again. I think I'm going to be exiting this position fairly shortly. I don't think this meets my new criteria really of can I make 100% in 5 years. I'm not as convinced on this one as I am on some of the others on this list, so therefore thinking about exiting that position. So there's a handful to close down there. There's a few cyclicals that will be exited in the next 6 months when the criteria is hit, and that makes the portfolio look a little bit neater, increase the level of concentration because it's probably a bit too diluted at the moment. But overall, I think I'm reasonably happy with this one. A bit different to the UK portfolio, which is more dividend based. There's a link for that coming up. There we have it. If you want to know when I'm buying and selling shares, there's a Patreon site and you can find the details for that below. Otherwise, thanks for joining me. Have a great rest of the week.